In a significant diplomatic maneuver, China is actively courting Latin America, particularly Brazil, amid the shifting geopolitical landscape influenced by the Trump administration's aggressive tariff policies. This week, President Luiz Inácio Lula da Silva of Brazil is visiting Beijing, where he will engage in high-level discussions with Chinese President Xi Jinping and various officials from across the Latin American and Caribbean region. The purpose of these meetings is to reinforce China's strategic foothold in a region increasingly wary of U.S. influence. President Trump's administration has made it clear that it aims to realign Latin American nations closer to the United States, echoing the historical Monroe Doctrine, which asserted U.S. dominance over the Western Hemisphere. What the people of Latin America and the Caribbean seek are independence and self-determination, not the so-called New Monroe Doctrine, remarked Miao Diu, China's assistant foreign minister, signaling Beijing's intent to present itself as a viable alternative to U.S. hegemony in the region. The timing of Lula's visit comes in the wake of Trump's sweeping tariffs, which have rattled many Latin American leaders who are apprehensive about their countries becoming collateral damage in U.S. China trade tensions. The tariffs imposed by the Trump administration have affected several key commodities, causing market instability and prompting nations like Brazil to seek deeper ties with China, a major buyer of agricultural products and minerals. Notably, trade between China and Latin America surged to nearly $519 billion last year, marking a doubling in trade volume over the past decade. Experts view Lula's strategy as a calculated move to diversify Brazil's international alliances and reduce dependency on Washington. According to Matias Spector, a political analyst at Fundação Getúlio Vargas, Lula perceives China as not just an economic partner but also as a geopolitical counterweight to U.S. dominance. Lula's strategy is clear: diversify Brazil's alliances, reduce dependency on Washington, and assert Brazil as a mover and shaker in an increasingly multipolar world, Spector stated. However, the relationship between Brazil and China is not without complications. Despite Lula's generally favorable stance toward China, he has recently increased tariffs on certain imports from the country, including iron and steel, reflecting concerns over local job protection and the potential influx of inexpensive Chinese goods into Brazilian markets. Ryan Berg from the Center for Strategic and International Studies emphasized that Latin American countries, while valuing their connections with China, are simultaneously wary of being undercut by cheaper imports. Mexico, which has historically maintained a larger trade relationship with the United States, has adopted a more cautious stance toward China, even as Chinese exports to Mexico grow significantly. Despite this diplomatic wariness, the presence of Chinese products, particularly automobiles, is rapidly increasing in the Mexican market, positioning Mexico as a vital player in China's Latin American strategy. As Xi Jinping extends his outreach to Brazil and other Latin American leaders, the focus is expected to remain on bolstering economic ties through increased orders of commodities like soybeans and iron ore. Lula has expressed hope that China will also assist Brazil in advancing its technological capabilities, particularly in areas such as space exploration and renewable energy. Looking ahead, the interplay between U.S. and Chinese interests in Latin America will likely continue to evolve, especially as new political dynamics emerge with the Biden administration. The recent high-level discussions signal a growing urgency for the U.S. to recalibrate its approach to the region, especially as Xi's persistent engagement with Latin American leaders poses a challenge to American hegemony. As this complex geopolitical chess game unfolds, the implications for economic stability and international relations in the region remain profound, warranting close observation in the months to come. In a significant development that could reshape international trade relations, U.S. President Donald Trump has announced a potential conversation with Chinese President Xi Jinping later this week. This follows a recent agreement to temporarily lower tariffs between the two economic giants, effectively easing tensions in a long-standing trade war. "I'll speak to President Xi maybe at the end of the week," Trump stated during a press briefing at the White House. The tariff reduction resulting from negotiations in Switzerland involving Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer represents a notable shift in strategy. Under the new arrangement, The combined U.S. tariffs on most Chinese imports, originally as high as 145%, will be slashed to 30%. This includes specific provisions for fentanyl-related goods, which are expected to be adjusted by May 14. Conversely, China will lower its 125% tariffs on U.S. products to just 10%. This three-month reprieve aims to create a conducive environment for further negotiations toward a comprehensive trade agreement. Trump emphasized the positive implications of this temporary arrangement, stating that it allows time for both nations to negotiate a more extensive deal. He also claimed that China had agreed to suspend and eliminate all non-monetary trade barriers. They've agreed to fully open China. And I think it's going to be fantastic for China. I think it's going to be fantastic for us, and I think it's going to be great for unification and peace, Trump remarked, expressing optimism about the bilateral relationship. However, Trump also issued a cautionary note suggesting that tariffs could be raised if negotiations do not yield satisfactory results within the 90-day window. He reassured that the U.S. would not revert to the previous 145% tariff rates. This cautious optimism has already spurred positive reactions in the financial markets, with the S&P 500 rising by approximately 2.5% and the dollar experiencing a notable increase. The urgency for such negotiations has been underscored by recent data indicating a significant decline in trade between the U.S. and China, raising concerns about the potential for higher consumer prices and economic repercussions. Trump noted that the relationship between the two nations is currently very good and highlighted his discussions with major U.S. companies, including Apple, which he claimed are increasing investments domestically. As the world watches closely, the potential for a resolution to the trade conflict appears more promising than it has in recent times. The anticipation surrounding the upcoming talks with Xi adds another layer of complexity to an already intricate tapestry of global economic relations. The outcomes of these discussions may not only impact U.S.-China relations but could also reverberate through global markets and supply chains. Looking ahead, as both Trump and Xi prepare for their impending conversation, the stakes are undeniably high. The coming weeks will be pivotal in determining whether this thawing of relations can pave the way for a lasting resolution to trade tensions, fostering an environment of cooperation rather than conflict in one of the world's most significant economic partnerships. In a surprising turn of events, the United States and China have agreed to significantly reduce tariffs on each other's imports for a period of 90 days. Marking a notable de-escalation in the ongoing trade conflict that has affected global markets. Announced on May 12, 2025, the agreement comes after intense negotiations led by U.S. Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer during their discussions in Geneva over the weekend. Under the terms of the agreement, U.S. tariffs on most Chinese imports will be slashed from an alarming 145% to 30%, while Chinese tariffs on U.S. goods will drop from 125% to 10%. The consensus from both delegations this weekend is neither side wants a decoupling, Bessent stated, emphasizing the desire for trade continuity. He further noted that the hefty tariffs imposed previously had created an environment similar to an embargo, which neither nation seeks. The announcement has sent ripples of optimism through Wall Street, with major stocks in the technology sector experiencing a significant uptick. The likes of Amazon, Apple, and Tesla saw their shares soar as investors welcomed the temporary reprieve from the trade war. The S&P 500 jumped 3%, while the Dow Jones Industrial Average surged by 2.5%, reflecting a broader market rally. This newfound optimism follows recent encouraging developments, including President Trump's announcement of a trade deal with the United Kingdom, which has paved the way for hopes of further agreements. The UK deal, characterized by reduced tariffs on agricultural products, has been touted as a potential boon for US exports. However, negotiations with the European Union have taken a more contentious tone, with the EU recently unveiling a list of US products targeted for tariffs should discussions fail. In the wake of the tariff agreement, economists have begun to assess its potential impact on the US economy. The Yale Budget Lab reported that the effective tariff rate on consumers has now dropped to 17.8%. A slight improvement from previous estimates. Despite this, they predict that U.S. GDP growth could still be adversely affected, estimating a 0.7% contraction for the year due to ongoing tariff measures. In addition to the immediate economic implications, the agreement has sparked discussions about the future of tariff policies, especially concerning the automobile sector, which was notably excluded from the current truce. Analysts speculate that automakers such as Tesla, General Motors, and Ford may soon be in line for negotiations as hopes rise that their interests might be prioritized in future discussions. The ramifications of the tariff reductions extend beyond the U.S. and China, affecting global commodities markets as well. Following the announcement, oil prices experienced a surge, with West Texas Intermediate futures rising approximately 2%. This rally reflects a broader sense of risk-on sentiment among traders, signaling a return to more stable investment conditions. Looking ahead, President Trump has indicated plans for further discussions with Chinese President Xi Jinping, potentially setting the stage for a more comprehensive trade agreement. "I think there will be a deal," Trump remarked, hinting at optimism for a full resolution to the ongoing trade tensions. Yet he also warned that should negotiations falter, tariffs could again escalate substantially higher, maintaining a level of uncertainty that may continue to weigh on market sentiment. As the U.S. and China navigate these complex discussions, one thing remains clear: the outcome of these trade negotiations could significantly reshape the economic landscape for both nations and their trading partners worldwide. The next few weeks and months are poised to be pivotal in determining the future of U.S.-China relations and, by extension, the global economy, in a significant display of camaraderie and strategic partnership. Russian President Vladimir Putin and Chinese President Xi Jinping participated in Russia's May 9 Victory Day celebrations, an event marking the end of World War II. Their appearance not only highlighted the deepening political and military ties between the two nations, but also underscored their shared vision for a multipolar world that challenges Western hegemony. As Xi observed the military parade alongside Putin, it became evident that this gathering was more than a ceremonial event. It was a statement of intent aimed at both domestic and international audiences. The joint statements issued during the celebrations emphasized themes of sovereignty, multilateralism, and a unified front against perceived Western domination. As noted by experts, the leaders' rhetoric was carefully curated to resonate with countries beyond the Western Bloc, projecting an image of stability and cooperation while dismissing Western criticisms of their actions, most notably Russia's ongoing war in Ukraine. The two leaders underscored their commitment to strategic stability through declarations aimed at reassuring nations that their alliance represents a viable alternative to the existing international order. The backdrop of this meeting was an evolving geopolitical landscape marked by increased militarization in both space and cyberspace. Despite international calls for arms control and cyber integrity, both Russia and China appear to be engaged in a race to enhance their military capabilities without scrutiny. Such activities not only serve to bolster their own security but also aim to project a sense of moral leadership, in contrast to what they describe as the failings of Western powers. The statements made during the Victory Day celebrations, which included a joint declaration on international law and a joint statement on global strategic stability, reiterated the importance both countries place on international law and multilateral diplomacy. However, analysts suggest that these declarations contain inherent contradictions, particularly in how both nations are actively pursuing military advancements while advocating for non-aggression in outer space. Notably, their calls for an arms control treaty in space juxtaposed their history of threatening to weaponize this domain, raising questions about their sincerity. This latest meeting between Putin and Xi is seen as a continuation of a relationship that has been steadily consolidating over the past 15 years. Their partnership has deepened through a series of high-level meetings and agreements, with the two leaders having communicated at least 13 times since the onset of the Ukraine conflict in early 2022. The consistent theme in their dialogue has been a mutual understanding that their alliance is vital to counteracting Western influence and establishing a new world order. Moreover, as both nations navigate their complex relationship, they also seek to appeal to nations that may feel marginalized by Western policies. Their joint statements emphasize a commitment to global governance that purportedly seeks to address the needs and aspirations of countries outside the traditional power structures. As they promote their vision of a multipolar world, they also aim to position themselves as defenders of international norms despite their own controversial actions. Looking to the future, the implications of the strengthened China-Russia relationship are profound. Their collaboration in military exercises and shared intelligence initiatives signals a growing commitment to a united front against Western policies. As the world grapples with evolving security challenges, the actions and strategies of these two nations will undoubtedly shape the geopolitical landscape for years to come. The trajectory of their partnership, marked by both cooperation and competition, will continue to influence global stability and the balance of power in the 21st century. In a significant development for U.S. China relations, President Donald Trump announced on Monday that he is likely to speak with Chinese President Xi Jinping later this week. This potential dialogue follows a weekend of negotiations in Switzerland, which Trump characterized as a total reset in bilateral relations. The discussions held in Geneva yielded an agreement to reduce tariffs significantly for a period of 90 days. A move Trump described as a promising step toward unification and peace. The talks in Geneva were very friendly, Trump stated, asserting that the relationship is now very, very good. He expressed optimism about the future of U.S.-China cooperation, suggesting that the forthcoming discussion with Xi could further solidify these diplomatic gains. The newly established tariff agreement marks a crucial shift from the previously high levels imposed during Trump's administration, which saw tariffs on Chinese goods soar to a staggering 145%. In contrast, the Chinese tariffs had reached 125%. Under the new terms, the U.S. will reduce its tariffs, although they will still remain elevated compared to levels before the trade war, estimated at approximately 55%. These tariffs include the significant 25% tax on imports from China, along with additional tariffs tied to specific issues such as fentanyl. China, on its part, has agreed to lower its import taxes on U.S. goods to 10%, a move that signals a willingness to engage in constructive dialogue and reduce trade tensions. The implications of this tariff reduction are profound, potentially impacting global supply chains and economic interactions between the two largest economies in the world. Analysts are closely monitoring the potential outcomes of this agreement. The reduction in tariffs could lead to a stabilization of markets that have long been influenced by the volatility of U.S.-China relations. With both nations reliant on each other for trade, the agreement is seen as a positive step toward mitigating economic uncertainty and fostering a more collaborative approach to international trade. However, the broader context of U.S.-China relations remains complex. The high tariffs still in place reflect ongoing concerns over issues such as intellectual property theft, trade imbalances, and national security. While Trump's administration has made strides in re-establishing dialogue, many experts caution that the underlying tensions have not been fully resolved. As Trump prepares to engage with Xi, the global community watches with anticipation. The outcome of their conversation could pave the way for further negotiations, or conversely could reignite disputes if progress falters. In conclusion, the potential dialogue between Trump and Xi represents not just a momentary diplomatic thaw but a crucial juncture in U.S.-China relations. As both leaders navigate the complex landscape of global trade and diplomacy, the world will be keenly observing how their interactions might shape the future of international relations and economic stability.